Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hello. How's everybody doing today? Welcome to another great Travillian Next episode. Very excited today to have Zane Smith here. Zane Smith is kind of my go-to guy on regulatory and risk issues when things break in the news. He is the Chief Banking Officer, EVP, at American Bank in Dallas, Texas. And thank you very much, Zane. Thank you for joining us.
Glad to be here.
Yeah, no. And before that, at American Bank, you were the Chief Risk Officer and I think Chief Credit Officer. And before that, you were at the OCC for 8 years. So you have a very unique perspective, especially now. We have all this stuff in the news, feels like it's breaking news, from Jason Mikula and the others every week on consent orders and BaaS. And your perspective is very interesting. Being a chief risk officer, now being a chief banking officer, having that background with the OCC, but also you spent the last couple of years looking at BaaS, working with different middleware, and seeing if it was a potential solution for American Bank. So you don't have a dog in the fight right now, but you have researched this extensively. So really interested to hear your perspective on what's happening right now, and then also what you think is going to come down the pike this year, and then how banks can prepare if they're in BaaS right now or looking to get into banking as a service. What are some of the main topics we can discuss?
Yeah, and I'll just kind of echo kind of the lens I'm looking through, which I think is important. The former regulator turned banker, whiteboarded BaaS for 24 months plus, pulled the plug late third quarter-ish. So I'm kind of a innocent bystander, more independent of kind of what's going on in the space. In tune to what's going on in the space, whiteboarded it. So just interesting. And I always make decisions with I make a Baker decision with that old regulator, kind of the devil on your shoulder. Hey, what's a regulator going to think?
That's a good devil to have on your shoulder in banking. Yeah.
Especially now in the BaaS space. So
you need to ask
really
yourself.
What I think is you got to shift the way banks think. It's from the old way of thinking of where banks, the old model, sponsor bank, you could outsource your expertise to that middleware provider. I think banks now need to transition to the new way of thinking where the bank needs to have expertise in-house. You and I think it was a post that Jason had about a bank leaving a middleware provider, bringing it all in-house. And I made some comment that BaaS middleware is dead or something to that effect. And you and I went back and forth on
stirring the pot, out there.
Yeah.
But in some ways it is a little bit, right?
Well,
or it's just evolving.
The regulators are forcing us that way, or forcing banks that way, because you can't, banks rightfully or not rightfully, so that thought they could outsource that expertise, outsource that risk to a middleware provider, which you can't do, or a vendor. And so regulators via the consent orders are telling banks you have to bring that in-house, or at least you have to have expertise in-house from the top down, from the board down to the analyst. You can't necessarily use old community bank employees or legacy community bank employees to run a BaaS program, because you need that expertise in-house. So you're going to have to increase your expertise, board level, C-suite level, analyst level, which has been in recent consent orders. The last 2 or 3, it explicitly stated you need BaaS expertise at the board and C-suite level. So I think you will start seeing more banks bring BaaS in-house rather than using a middleware provider, because then at what point, what value are they providing?
Yeah. And with Treasury Prime, they kind of shut down their, I guess, fintech division, now selling directly to banks. So the technology will be there, and they'll work with banks on that side. And I think my question to you from a talent perspective in Travillian is, what type of talent now will banks need and fintechs, now that you don't have that middle piece. You don't have a unit or a Treasury Prime or a Synctera. I guess they're still, but let's just take Treasury Prime, for instance. What will they need on each side of the house to make that relationship work without Treasury Prime kind of being their middle person?
Yeah. So from a bank side, you're still going to need the traditional roles, but whether like you're still going to need a chief risk officer, chief compliance officer, chief X officer. Whereas in a legacy community bank, they need to know the basic X's and O's. If you're trying to be a BaaS sponsor bank, you've got to know a little bit of technology, a little bit of payments, a little bit of regulatory affairs. So you still need the alphabet soup of the C-suite, but their expertise needs to be more tailored to that, to the BaaS embedded finance play. Yeah. On the fintech side, you almost need a banker in-house because the fintechs are going to have to talk more banking speak or banking lingo if you're cutting out the middleware provider. So they're going to have to know what KYC is, CDD, EDD, all those alphabet soup of compliance that banks are getting in trouble with. You can't no longer rely on the middleware. That why I thought banks, or why even that even was a thing, that the middleware is going to provide it all for you, and the banker said, great, I don't need to check that anymore, is beyond me. But I think that's a way of the past. So your banker is going to have to be more tech savvy, innovation savvy, and your fintech's going to have to be more banker savvy.
Yeah, it's like you don't have that interpreter in the middle anymore.
Exactly. You and I go to Mexico, we're going to have to know Spanish. We don't have that interpreter there.
Yeah, like, oh, it's so great to have that interpreter. I guess you just like speak into your phone now, and there's some apps that like spit it out on the other side. But no, that's great. And also, you know, from the fintech side, speaking with a lot of our client executives who are sponsor banks, they are very picky and choosy about who's going to be allowed on their platform. It's not 3 years ago where, you know, I've talked with a lot of people over the last couple months, and, you know, the same word keeps coming up, maturity. Like, the industry is maturing, the BaaS industry, and it kind of went through those teenage years where you're taking risks and, you know, you're not really thinking too much about the future to, okay, do we have this in place? And now, you know, out of this mess, or whatever you want to call it, recalibration with the consent orders, it kind of gives you a roadmap, right? If you're a current sponsor bank and also looking to become a BaaS bank, it gives you a little bit of a playbook. Like, this is what the regulators are asking for. This is what you're going to need. And I printed out I got the lineage one from a few weeks ago. Yeah, that's what I do in my free time. I read consent orders. But I also print out kind of the experts when they, like you and Jason and other people, when they print out kind of the Cliff Notes version. And Stan Arzula, a lawyer, fintech bank lawyer, he was talking about bank board of directors needs to be involved a lot more now. And before, maybe that's not how it was.
Well, how it should have been, though. But to your point, these consent orders are, I call them gap analysis. They're kind of the roadmap of what banks need, or what the regulatory bodies expect and what banks should be doing. But if you read them, it's basic blocking and tackling. Anytime a bank should go do a new initiative, you probably should have a board and executive management team that knows what they're doing in that. I know nothing about making baseball bats. That's behind you, or lending to baseball bat manufacturers. So I probably shouldn't start a business line of lending to baseball bat manufacturers. You probably need to have that expertise. So banks that were going to be sponsored BaaS banks, their boards should have been knowledgeable in technology and vendor management. The C-suite should have known all of that. So to me, that's not unique. That's what it should have been. And a lot of the consent orders are written, well, the bank still owns the risk with KYC and knowing your customer, doing the due diligence. Duh, that's not anything new. You can't rely on a vendor to do that for you. And if you are, you still have to validate what they're doing is right. So you're absolutely right. There are gap analysis, there are roadmaps, but it's still existing guidance that's already been published that banks have just not chose to do, wanted to grow fast, wanted to be innovative. So
It's like those, like I said before, those teenage years where you're just, we can do it differently. I know best type of thing. And you're getting back to the basics here. Yeah.
But let's take BaaS out of it. Let's say you and I go buy a bank. All right. Mm-hmm. We go buy a bank, ABC Bank in small town USA, and it's a $50 million bank, and we want to scale the commercial loan portfolio, and we want to lend to C&I and to commercial real estate. Mm-hmm. So me and you go put $200 million on the books before writing a policy, before adding underwriting staff, before adding lenders, before adding XYZ. No regulator's going to allow that, right?
Yeah.
So that's essentially what a lot of BaaS banks did. They jumped head first, but didn't put all the infrastructure. They put the cart before the horse.
Mm-hmm. And I always use this analogy too. Just you got to build that offensive line. I know you like football. You can go out and get the fastest wide receiver in the draft, or the best quarterback. But if you don't have that offensive line, which I like to call the risk compliance, like you said, know your customer, those type of things in place. And then you go get the product manager or the head of payments, those type of roles. Or you best case scenario, you get them at the same time so they can work together on how to build it. But you're right. Maybe we got a little bit over our skis there, but I'm still incredibly optimistic about this industry. I think there's so much potential out there, and I hope and I know a lot of banks are starting to look at it. Some are shying away. Others are like, we don't want that scrutiny. But I think a lot of the community banks, the smaller banks, are like, yeah, we need another way to generate revenue, and we need another way to bring in income. So we need to look at this and give it a serious look because a lot of banks are going to be doing this. The ones that are doing it the right way and have been doing it for the last 10 years the right way are growing and have a good foundation in place. Others looking to get into it, I think, like you said, now they actually have a gap analysis. But I think a lot of them understand that this is a huge opportunity. Potential revenue opportunity to work with fintechs and work with other embedded banking products, because that's where the market's going. And if you just watch it pass by, it's going to be hard to grow.
Yeah, and I'm not here to say that banks shouldn't do it. You shouldn't do it unless you've got the expertise and the infrastructure to do it.
Exactly.
You've got to define what your strategy is. BaaS. I hate the word BaaS now. It's got such a negative connotation.
Yeah.
It's more. Banks have partnered with vendors forever for the end of time. And so it's not a new concept. It's just this BaaS is what we're calling it now. Embedded finance, whatever you want to call it. Banks partnering with fintechs or vendors. I'm still bullish on banks. Again, banks were doing it years ago. So if banks don't innovate and they don't evolve, they're going to die on the vine. So absolutely, banks have to be innovative, and you've got to get the right people in the boardroom. You got to get the right executives in the C-suite to test the bounds and to try new things, but still within the constructs of safety and soundness. So yes, I'm bullish on embedded finance, innovation, whatever we want to call it. Let's let BaaS die, but have the expertise, have the framework built out to effectively go innovate. But something you said that I think community banks will need to explore this, but you got to define what your strategy is. A lot of times it used to be a deposit play for low cost deposits, which is no longer a thing anymore. Now everybody wants Fed Funds Plus. So if it's a deposit play, it may be a deposit, but they're going to be expensive deposits. If it's a fee play, that's probably more of a payments play. Do you have the infrastructure to handle all those payment rails? Do you understand the ACH and the treasury management nuances that go into that? And so that's what I always try to tell people when we're talking about BaaS or embedded finance is, have you done the analysis of first what's your strategy? Is it a deposit strategy? Is it a payment strategy? Is it a lending strategy? And then is the juice worth the squeeze? Because if you're doing a payment strategy, you're going to have to increase your FTE count considerably to handle the operational aspects, the compliance aspects. So if you're doing it to get X in fees, but you've got to raise X in overhead expense, net, you're neutral. So you've got to figure out what your strategy is and really build all out and tease all that out on what are you trying to do with the strategy.
Yeah. And I wanted to go back to when you said you were kind of deep diving this over 2 years, whiteboarding it out. What were some of the pitfalls? You're doing it the right way here. We're talking about strategy, and you're looking at it from a lot of different perspectives. You're speaking with your CEO and your board. What were some of the challenges you saw coming down the road? Was it the regulatory environment? Was it the technology? From your perspective, when you were deep diving this for a couple of years, what did you see as potential pitfalls?
Yeah, the space, initially the space was over-reliant on the vendors or the middleware providers. Mm-hmm. I would get on the phone with the Syncterra, Synapse, Units, all of them out there, Treasury Primes, and they would say, we can do it all for you. You can get set up in 2 weeks and we'll be onboarding. And I'm like, my regulatory red flags were going
ding,
crazy.
Ding,
I'm
ding.
like, there's no way you're going to get a bank set up in 2 weeks to do everything that you need to be doing. And so some small town banker in small town USA, they hear that and they're like, great. And we'll bring $100 million in deposits. You'll get this much in fees and we'll do all your compliance. I saw
sounds like a commercial. Yeah, it sounds like a commercial where like, we'll fix everything in your house.
Yeah.
And
a middleware provider gave me a chart and it said, it was very basic. It had fintech, it had the middleware in here, and it had the bank here, the sponsor bank. And they said, the middleware provider said, we'll bring your fintechs and we'll do all your compliance, KYC, EDD you need to, and we're just going to do an FBO to you. And I'm like, conceptually, that's great, but I know too much to know that that's not how it's going to work. And so that's why I was like, I started scratching the surface more. And I was like, there's no way the regulators are going to allow this. Mm-hmm. And so that was one of the big ones. And then I think at that time, Blue Ridge had already gotten their first consent order. Mm-hmm. I had heard murmurings of a lot more coming down the pipe. And so we were doing some other things at the bank already. We were growing fast. We had some other riskier business lines. And so I was like, it's called risk layering. I didn't want to add another risk layer to it.
Yep.
And then the regulator come to me and say, all right, you got to stop. Like,
too many
put you under consent order, put handcuffs. And it wasn't the right move for us. Yeah.
No, that's the, we spoke before about how you launched a digital bank, I believe.
We're whiteboarding that one as well.
Whiteboarding it, sorry. So yeah, you had a lot going on. So you have to kind of pick and choose.
Yeah.
And
as an ex-regulator, you can't do anything until you whiteboard it. You got to get the policies, you got to get your risk assessments.
Yeah.
You can't just go live.
Yeah. Well, that's why I really like your point of view, because you have that point of view, and like you brought it up a couple times on this chat, where you're like, whoa, something's not right. You got the little guy on your shoulder.
Spidey sense.
Yeah, Spidey sense. Like, whoa, yeah. So when you were hearing those kind of stories of, we'll get you up in 2 weeks and the money will be flowing and everybody will be hugging each other and you'll be able to buy a house in Bermuda and never work again. If it's too good to be true, usually it's not true.
Just all the things that FBO scared me and still scares me. Like, I was like, well, how do you reconcile all your accounts? Like, how do I know whose money's where? And the middleware provider's like, oh, we'll do all that. And then you've heard that, I think it was a bank, a middleware, and another bank. There was a bank doing the ACH, and another middleware was trying to reconcile them, and they've lost like $13 million. It was a crazy amount because it was FBO. And so all these things that the middlewares were reporting to do, all my years of banking experience it's like 1 + 1 does not equal 4 here. Like, you can't tell me that works.
Yeah. Some things don't change. Gravity, math. Those things don't change. Yeah.
Yes.
Yeah.
And we've overcomplicated banking.
Yeah.
Banking at its core is pretty simple. You take deposits and you make good loans or make good investments in your bond portfolio.
People pay them back, and
We've tried to over innovate and over AI this and that, and it's. I want us to innovate, and I want us to move community banking forward, but let's not go from the rock or the wheel out of a rock to a spaceship. Like, you've got to put framework in place.
A horse in there, or it's got to be a Model T car, and then you move up to the Elon Musk spaceship. And I think this is a kind of moment to kind of take a deep breath. And there's still a lot of banks, and I think a lot of banks, like I said before, I think they're the ones that are looking at BaaS now are. I'm not saying they're grateful for this, but at least they're getting a little guidance from the people that I hate that the people that kind of are the pioneers, the guinea pigs. They're taking the brunt of it, and then everybody kind of comes behind them. It's like, Lewis and Clark, looking for the new world, and like, well, don't go that way because we heard there's mosquitoes and things that way. Yeah. So you're learning from the people who went down that river and got bit by the mosquitoes or whatever. I don't know if that's a good analogy, but you do learn from your mistakes. And you're right. It's kind of getting back to, and we had a Travillian Next episode a couple of weeks ago with Sean Willett from Lincoln Savings Bank, who we just placed. And he said it was getting back to basics. It was called BaaSics. But since we're not saying BaaS, basics, the blocking and the tackling, like you said, just being a bank, innovating, of course, but things we would never do before as a bank. We're going to get back to running it the right way, and then that's step one.
I like going back to basics, and you can innovate, but you can still innovate within a 3 lines of defense program. You can still innovate within basic risk constructs, and you can still innovate using risk assessment. RACMs, they call them. Risk control self-assessments. There you go.
So you can
still
rack them.
I don't know when bankers thought we need to innovate, and then we need to throw basic safety and soundness and risk frameworks out the window. Like, you could do both together.
Mm-hmm. Yeah, it happens in a lot of different industries, man. It's I'm watching a documentary in the 1920s right now, and everybody was just speculating and going crazy and getting away from the basics of investing, and you saw what happened at the end of the 20s. So it really is kind of being sound, innovating, but not going crazy, because you're in that environment where you're being regulated, and that charter is, at the end of the day, it's the bank with the charter. The fintech, they might lose funding, they might go under, whatever, but if you lose that charter or you get hit or people leave your bank, you could be around. Some banks are around for 250 years. And, we did get away from kind of, we're going to run out our charter. We don't really have to be involved. No, this is a true partnership, man. And you have to be involved. You have to understand your client, understand your partner, understand what they have on their end, how it works with you. Because at the end of the day, they're selling your products through their financial technology. So your name's at the bottom of all those websites. We're not a bank. It's this bank. Yeah,
exactly. And maybe I take it for granted because I have that fundamental regulatory background. But to me, that a banker loses sight, is beyond me, that they don't think their name's on it at the end of the day, that they aren't culpable in it, or that they are not responsible for it. Kind of blows my mind. And I've got a little different perspective too, because our bank, we had new investors buy it 5 years ago at $55 million, and we grew it to $500 million in 4 years, effectively 4 years. Went from zero commercial lending to up to 300 or 200 million in commercial lending. We do some wholesale lending opportunities. So it's just second nature to me. If you're going to grow and scale something, do something new, yes, let's go ahead and do it. But just blows my mind that you would want to go do that, but then not put the policies, procedures, and frameworks in place to allow you to go do that. And maybe it's just I take it for granted because I've been ingrained with it for almost a decade at the OCC. That's what you do. And you don't just kind of go the Wild Wild West and just gunslinger out there. Let's go do it without actually doing it right.
And kind of planning to scale. And what if, from a bank's perspective, what if we onboard this client and you're going to work with them and they're going to offer some new product, and all of a sudden you have 3 million people that are coming onto your platform very quickly. So you gotta stress test that almost, right? You gotta stress test your program and understand what they're doing. Are they coming out with a new marketing program? Are they hitting a new segment? Do they have a new product coming out that's going to bring in hundreds of thousands of new customers quickly? And can you handle it? Yeah.
Correct. In fact, I had a lunch with the president who's trying to do BaaS right now. They're whiteboarding it, and they want to do it. And we had some just basic questions. I was like, I love what you're talking about and what you're thinking of, but my very first question was, if you bring in all these customers, what's that going to do to your balance sheet? That's going to balloon your balance sheet. How are you going to support that with capital? Just having those very basic questions and sitting around a table and whiteboarding it. If we brought in 1,000 customers, one is our legacy infrastructure. Can we handle that many customers? Yes, no. If we bring in that many customers, what's that going to do to our deposit balances? Is our capital going to support that? If we bring in all those deposit balances, what are we going to do on the asset side? So you've got to start working through all these things. You can't just say, yes, I want to go do BaaS, and then great. But 6 months down the road, you ballooned your balance sheet to $500 million, and you don't know what to do with it from an asset side or a capital side. Why did you go do it?
Yeah, you really have to build in that scenario analysis and stress test it. And can your technology mandate it? Can your finance team handle it? Because there's going to be a lot more transactions, reporting.
What if a fintech goes under, and how are you going to unwind that fintech relationship? You got to think through all these.
Yeah, fintech goes under, or you divorce a fintech and you bring one on. So no, this is great, Zane. Always love getting your point of view, because you're an innovator, but you're rational too, and you're let's make sure we're planning this out. And it's pretty, when you think about it, it's not a crazy thing in business.
It's not new age.
No, it's not. But I mean, we're not reinventing the wheel here. It's kind of planning out the different scenarios for your business, as banking has been doing for hundreds of years. If you open up 10 new branches in New York City, how's that going to affect your deposit flow and your risk and fraud and your BSA? It's just now it's moved electronically, and it's different types of partnerships. Yeah. But at the end of the day, it really is, like I said, basics, and then innovating on top of that. So nobody's saying, hey, let's just stay where we are and we're all good and nothing's going to change in banking. But at the same time, you need to remember you are a bank and you're regulated like a bank, and you need to make sure you have everything in place, especially from the talent and technology side, to make this happen. If you don't have the right people in place and the right culture in place, something's going to go off the rails. You really need somebody who knows how to do this. It's like if you're hiking out in Yellowstone, you want to go with somebody who's a ranger who's been out there. You don't want to just say, let's just go hike Yellowstone, see where we end up in the middle of the night.
Yeah, it's unique because there's not really very few banks do BaaS, or BaaS is a newer embedded finance. Again, let's stop using BaaS. This whole fintech is a new space, so you're not going to find an expert that knows everything about it, but you've got to find the right people that are willing to ask the right questions, have a basic understanding of regulation frameworks, banking as fundamentals as a whole, technology, compliance. So you kind of have to have someone that, I don't know the exact thing, but you want someone that's 6 inches deep, a mile wide, not a mile deep and 6 inches wide. Like, you want them well-versed in a number of things to then go execute this strategy. If you only want to do underwater basket weaving loans, yes, get that expert in underwater basket weaving loans. If you ask him to go analyze a liquidity statement, they're not going to know what to do, which is fine.
Yeah, specialty. And somebody who's open to, and somebody who likes to learn, because it's evolving. You need to keep up to date with the regulators, what's happening in DC, what's happening with different, somebody who likes that and wants to absorb all that information, because there's a lot happening. Or you could just call Zane and he'll tell you what he thinks.
I'll set up a consulting arm. Call me. I'll be your BaaS board member. Or
set up AI Zane. People are setting up like AI programs, and then you just feed it all the information you've learned all over the years, and then they call you or call your AI, and it's you giving them, the answer.
Well, you
What
remember
would Zane do?
You remember Ask Jeeves, whatever that
Yeah.
search engine? It'll be Ask Zane.
Yeah. What would Zane do? And then they're like, I'm about to open up BaaS program, and I don't have it. And your AI bot, while you're sleeping, kind of gives them an answer.
There you go.
There you
It'll
go.
be
Came up with a new business.
There we did, and it'll be like a Mr. Clean that'll pop out like a genie.
He pops out of the like Aladdin. He pops out.
This is monogram on your computer. This is.
And then you have to rub the bottle or the lamp, and then out pops.
Well, here we go, and then we can even tease it out. It's like ChatGPT. If you go on to like version 4, I think you can. Do you want it more balanced? Do you want it more artistic? You can say, do you want more regulatory Zane, or do you want more banker Zane? You can pick what the answer is.
Or do you want to cut to the chase, Zane, or more open to giving it to you lightly, or do you want the truth?
That's not Zane.
The
I'm
unvarnished
pretty
truth.
direct.
Yeah. Well, your AI can be a little, you're a little buffer, a little nice before you get right to the. Look at that! We come up with a $1 billion idea right here on Travillian Next. You just don't know what's going to happen. So anybody wants to invest, call me and Zane.
Call us.
But I think we have our retirement plan.
There we go.
No, this is great, Zane. Always wonderful speaking with you. You're out there on LinkedIn and Twitter, X, trying to give information to people because I know you care about the industry, you care about community banks, and you want them to grow and thrive like we do. So very happy to have you on today.
Yeah, perfect. Like I said, I'm on LinkedIn. Reach out to me. You can email me.
You can put out some good whiteboards on there sometimes.
Yep.
Yeah, and walk and talks. When the weather warms up, we'll get back to the walk and talks with Zane. Thanks, buddy.
It's been fun. I appreciate it.
Appreciate it, man.
Yep. Take care.